Hello dear my CA final students, hoping your preparations are going good. Dear friends, as you may know that recently ICAI have issued the amended booklet of MCQs for your CA final direct text exams. Okay, so we have made the analysis of these MCQs and we have already uploaded the Hindi version of the analysis, and in this video we are going to see the English version of the analysis. Okay, so in this video we are going to see the analysis in 100% English language. So this video is going to be very helpful for those students for whom Hindi is not very comfortable language. Okay, so maximum 2 hours, give me your 2 hours and we will see each and MCQ of these MCQs. As you may know that ICAI have issued 2 booklet. One contains the MCQs which are of the nature of case scenario MCQs. There are total 25 MCQs in that book, and another is the normal MCQs where there are around 50 MCQs. So in this video we are going to see the normal MCQs from 1 to 50. Okay, so dear, as you may know that we have already released the book called CA Final DT step-by-step solution book, which contains the MCQ of ICAI as well as the detailed answer, which contains the MCQ. So this is the MCQ and this is the step-by-step solution of these MCQs. So you should get this book, and if possible, have a printout of this book. So this book is going to be very helpful for your exams. Okay, so without wasting any further time, we are starting with MCQ number 1. We will take maximum 2 hours and all your MCQs will be covered with the revision of the relevant provisions of the act also. Okay, so starting with Mr. Rajesh and Mr. Brijesh, resident individuals, are due to receive rupees 13 lakh each on 1/4/2022, means previous year 22-23. Okay, on maturity of life insurance policy taken on 31st/3/2012 and 1/4/2012. It means Mr. Rajesh has taken the life insurance policy and Mr. Brijesh has taken the life insurance policy, and they are due to receive rupees 13 lakh each on 1/4/2022. Okay, dear friends, as you may know that recently in life insurance policy spectrum there is a amendment where ULIP has been provided some separate conditions for exemption under section 1010D. Okay, but that ULIP should have been issued on or after 1st Feb 2021. So in this case, even if these life insurance policies are of the nature of ULIP, those additional conditions are not applicable in this case, as provided in 4th proviso and 5th proviso to section 1010D. These are not applicable in this case. Okay, because these because those additional points are applicable only for those ULIPs which have been issued on or after 1st Feb 2021. Okay. The sum assured is rupees 10 lakh. It means the sum assured is rupees 10 lakh and you are going to receive rupees 13 lakh, means there may be the element of bonus also. Okay, they had paid an annual premium of 1.1 lakh each. When they have paid an annual premium of 1.1 lakh each, are provisions of TDS attracted on maturity proceed received by Mr. Rajesh and Mr. Brijesh. Dear friends, if you are paying any amount for the life insurance policy, there are 2 provisions attracted in this case. First is when you pay the amount, you can claim the deduction under section 80C, and on the receipt of the maturity proceed, listen me very carefully, you can claim the deduction under section 80C on the premium, on the payment of the premium amount, and on the reduction and on the receipt of the maturity proceed or any amount, that amount may be exempt under section 1010D. That amount may be exempt under section 1010D. Okay, how much that you can claim under section 80C is that is maximum 10% of the sum assured, maximum 10% of the sum assured. If you are paying the premium which is more than 10% of the sum assured, the excess portion is not eligible for section 80C deduction. I hope you get the point. And whenever you receive any money in the form of the maturity proceed or bonus etc. from the life insurance company in the context of a life insurance, it is possible that that money would be exempt under section 1010D, under section 1010D. But sir, if that money is not exempt, or if that amount is not exempt, then it is taxable in the hands of the recipient. And the payer has to make TDS, at the rate of 5% under section 194D. So the TDS provision is applicable only when the sum received is not exempt under section 1010D. If the maturity proceed or any amount which has been received in the context of the life insurance policy is exempt under section 1010D, then there is no question of making TDS. But if such sum is not exempt, then TDS would be attracted under section 194DA at the rate of 5% of the income comprised therein, provided the amount or the aggregate of the amount paid during the previous year exceeds rupees 1 lakh. This has been provided in section 194DA. So we have given each and every point in great detail over here, so must get the printout of this book. That now we are not going to spend a lot of time in this. Okay, so the very important question is, when the maturity proceed or when the amount which has been received in the context of life insurance policy is going to be exempt under section 1010D. Section 1010D says, if the premium amount that you are paying, that premium amount should not exceed 20% of the amount issued and of the amount insured under the policy, or the actual capital sum assured under the policy. Means the maximum premium amount can be 20% of the actual capital sum assured. Okay, but sir, 20% is a huge sum. Yeah, and people used to take very heavy life insurance policy and used to get the exemption under section 1010D, but that exemption is intended for the genuine investors or the small persons. So act has been amended, and with effect from 1/4/2012, listen me very carefully, with effect from 1/4/2012, if you want to claim the exemption under section 1010D, then the annual premium should not exceed 10% of the actual capital sum of the policy. Are you guys getting? It means if you have taken the policy up to 31/3/2012, you can pay maximum 20% of the actual capital sum assured as premium. But if the policy has been taken with effect from 1/4/2012, then the maximum amount that you can pay under the policy as annual premium is 10% of the actual capital sum assured under the policy. If you are paying more than that, then exemption under section 1010D is not applicable, and if the exemption is not available, then the payer has to make TDS under section 194DA at the rate of 5%. But 5% of what? 5% of the amount of income comprised therein. Sir, what it means? Let's say the insurance policy, the amount that I am going to receive under insurance policy is rupees 25 lakh. So is this entire amount my income? No, sir. Sir, I have paid the premium of rupees 2 lakh per year for 8 years. Means I have already paid 16 lakh rupees. Then how much is my income? Only rupees 9 lakh. So the TDS would be made at the rate of 5% on this 9 lakh rupee, not entire rupees 25 lakh. I hope everybody is clear with this. Okay, so I will not take much of your time. Mr. Rajesh has taken the policy on 31/3/2012. Dear friends, how much, to what extent Mr. Rajesh can pay the annual premium of to the actual capital sum assured? Sir, 20%. If Mr. Rajesh pays annual premium which is up to 20% of the actual capital sum assured, Mr. Rajesh will get the exemption under section 1010D because he has taken policy up to 31/3/2012. But Mr. Brijesh is not so lucky, and as he has taken the policy on 1/4/2012, Mr. Brijesh can pay annual premium only up to 10% of the actual capital sum assured under the policy. Okay, how much is the actual capital sum assured under the policy? Is rupees 10 lakh, and Mr. Rajesh is paying 1,10,000 per year as annual premium, and also Mr. Brijesh is paying 1,10,000 per year as annual premium. Okay, so how much Mr. Rajesh is paying? Sir, 11% as a premium of the actual capital sum assured. And how much Brijesh is paying? Sir, 11%. But is Mr. Rajesh but can Mr. Rajesh will get exemption? Yes, sir, because he is paying 11% and for him 20% is allowed. Okay, so the amount of rupees 13 lakh received by Mr. Rajesh is exempt under section 1010D because the premium that he is paying is within the allowed limit of 20%. Are you guys getting? Okay, but as far as Mr. Brijesh is concerned, Mr. Brijesh is paying the annual premium which translates to 11% of the actual capital sum assured, which exceeds the threshold limit of 10% as provided by section 1010D for the policies for the policies which has been taken on or after 1/4/2012. So Mr. Brijesh is not eligible for section 1010D exemption. So in this case Mr. Brijesh has received how much, sir? 13 lakh. So is entire 13 lakh rupees the income of Mr. Brijesh? No sir. Out of rupees 13 lakh, how much premium has Mr. Brijesh paid till the life of the policy? Mr. Brijesh has received how much? 13 lakh rupees. Okay, and the policy has been taken on 1/4/2012, and the maturity is I can say 1/4/2022, means how much? 12 13 13 14 14 15 15 16 16 17 17 18 18 19 19 20 20 21 21 22 10 years. Okay, so 1,10,000 each year, and for 10 years means 11 lakh rupees. Okay, so how much is the income comprised in this case? 2 lakh rupees. Is the aggregate payment exceed rupees 1 lakh? Yes sir, aggregate payment is rupees 13 lakh. So the conditions of section 194DA is complied with. So the payer has to make TDS of 5% of the income comprised therein. How much is the income comprised therein? Rupees 2 lakh. So that payer has to make a TDS of rupees 10,000 while making payment to Mr. Brijesh. But is the TDS attracted in the case of payment to Mr. Rajesh? No sir, because Mr. Rajesh is eligible to get the exemption under section 1010D. I hope you guys are clear with this. So the correct option is no tax is deductible on source on maturity proceed received by Mr. Rajesh. In case of Mr. Rajesh, 1010D exemption is available, but in case of Mr. Brijesh, 1010D exemption is not available, and TDS estimate of rupees 10,000. So the correct option is D. Okay, so dear, this is the means a detailed explanation of each and everything. So you should have this book, and it is going to help you guys a lot. Okay, now we are moving forward. ABC Limited took on sublease a building from Ms. Janvi with effect from 1/7/2022. Means for the previous year 22 means 23 9 months. Okay, at a rent of rupees 20,000 per month. So how much rent is payable? 20,000 rupees into 9 for building. Okay. It also took higher machinery from Ms. Janvi with effect from 1/10/2022, means 6 months. So as far as machine is concerned, we have taken is on lease, but only for 6 months during the previous year 22-23, and the lease rental is rupees 15,000 per month. So how much lease rental became in total? Sir, I think 90,000 rupees, and in this case rupees 1,80,000. Okay. So what is the question? ABC Limited entered into 2 separate agreements with Ms. Janvi for sublease of the building and hiring of the machine. Means there are 2 separate lease agreements which ABC Limited has entered into with Ms. Janvi. Okay, which of the following statement is correct with reference to ABC's Limited liability to make TDS, assuming that 1 month rent was received as security deposit, which is refundable at the end of the lease period. So this is very important. So these are very important words, which is refundable at the end of the lease period. So dear friends, if you are paying rental in respect of any building, etc., there are 2 sections which provides for the TDS liability. One is your section 194I. I can say this is the primary section. 194I, and if 194I is not applicable, then 194IB. Okay. So section 194I says that if you are paying rent for two things, one is building, land, and another is plant and machine, etc., and the aggregate amount of payment during the previous year is rupees 2,40,000 or more, then a TDS is attracted in the hands of the payer. So the payer has to make TDS. In case of building, the TDS rate is 10%, and in case of plant and machine, the rate of TDS is 2%. Okay, but the payer should have engaged in business or profession, and the turnover from the business should be more than rupees 1 crore, and the gross receipt from profession should exceed rupees 50 lakh. Okay, so this is the background of TDS under section 194I. Then sir, why 194IB? Dear friends, there occurs many situations where a salaried individual who do not have any business profession. Okay, if I do not have any business profession, section 194I is inapplicable for me. But sir, these salaried individuals are paying a rent of rupees 3 lakh, more than rupees 3 lakh per month. There are many places in Chennai, in Hyderabad, where the rental is 3 lakh rupees per month, where the rent is rupees 4 lakh, 5 lakh rupees per month. So to bring those individuals into the TDS parameter, section 194IB has been introduced in the act, which says that if section 194I rent is not if section 194I TDS is not applicable in this case, and if you are paying the rent of more than rupees 50,000 per month, if you are paying rent of rupees more than 50,000 per month, then you have to make TDS at the rate of 5% on the entire rent at the last date of the month or the last date of the tenancy, as the case may be. So 194IB is attracted when section 194I is not applicable. Okay. Also, I will like to talk about section 194M. Dear friends, sometime before a section has been introduced or added in our Income Tax Act, that is section 194M. Section 194M is also a kind of alternate TDS section. Alternate TDS section means if the main TDS provisions are not applicable, then section 194M will come into play. But section 194M covers three kinds of payment. And what are these three kinds of payments, sir? These three kinds of payment are, my dear students, one is your contract charges, okay, another is the brokerage, and the last one is fees for professional services, technical services. Okay, so contract charges main TDS section is 194C, brokerage main TDS section is 194H, and fees for technical services main TDS section is 194J. If TDS due to some reason is not deductible under section 194C, 194H, this is 194H basically, or 194J, then TDS under section 194M may be attracted. So 194M is the secondary section and these are the primary sections. Okay, only thing I am going to tell you guys in this case is that 194M is not applicable on rental payment. So dear, please mind it that 194M is not applicable on rental payment. It is applicable on three kinds of specific payments, which is and these are the contract payment, another is brokerage, and the third one is FTS or fees for professional or technical services. Okay, I hope you guys are clear with this. So okay, come and see with me. Okay, so dear, also here is a 1 month rent which has been received as security deposit, but that security deposit is refundable at the end of the lease period. Dear friends, if the security deposit is refundable at the end of the lease period, is it rent? No sir, it is just the security deposit. But sir, if the security deposit is adjustable against the rent, then when that amount is adjusted against the rent, we will consider it, we will count it as a rent, and we will make TDS under section 194I inclusive of those adjusted amount. Okay, I hope you guys are clear with this. Okay, so ABC Limited, for a corporate SSC, 194I is mandatory. For an individual or HUF, 194I will be attracted if they are carrying business or profession and the means turnover from the business in the preceding previous year exceeds rupees 1 crore and the gross receipt from the profession exceeds rupees 50 lakh. But as you are a corporate SSC, 194I is applicable in all cases. Okay, a corporate SSC is paying rental of rupees 2,70,000. But sir, these are for two different things, and there are two separate agreements which has been entered into. How can you ignore this? Dear friends, 194I applicability is not dependent on the asset type which has been leased or the number of agreements which are subject to the lease. The only thing, or the most important thing for section 194I purpose is that section 194I applicability is considered from the recipient or payee point of view, that whether you are paying rupees 240 or more or not to the payee in the financial year in the name of lease charges. And if you are paying for whatever asset you are paying, means for building, for plant machinery, for building 1, building 2, building, and we are not concerned. We are only concerned is that we are going to aggregate all these from payee point of view, from the recipient point of view, and how many lease agreement we have entered into, again we are not concerned. So ABC Limited is paying more than rupees 2,40,000 to Miss Janvi in a financial year. TDS under section 194I will be attracted, but hold on, TDS would be at the rate of 10% on rupees 180 because it is for the lease of the building, and TDS would be at the rate of 2% on plant and machine. I hope you guys are okay with this. Okay, but yes, this, as this rupees 20,000 is refundable, this will not be subject to 194I TDS. Okay, so the correct option is going to be TDS at the rate of 10% on 180 and 2% on 90,000. So the correct option is C. So we are moving further with the great speed. Okay, we are moving forward. So dear, here we have given the step by step solution, so you guys should refer this also, and as I have already said, you should have a printout of this book. It is going to be helpful for you guys a lot. Okay. Mr. Valish, employed as a manager of EBC Limited, pays rupees 50,000 per month to his landlord. Dear friends, Mr. Valish is an employee associate. So as he is an employee associate, he is not carrying any business or profession. So 194I TDS is not applicable in this case. But yes, to cover these kind of associates, a new section or an additional section or a secondary section has been introduced, which is 194 IB. But here, for the applicability of 194 IB, the payment of rent should exceed rupees 50,000, and here you are paying only rupees 50,000. Since for the applicability of 194 IB, the minimum payable rent per month is more than rupees 50,000, but as you are paying rupees 50,000 only, so 194 IB TDS is not attracted in the hands of Mr. Valish, and also 194 I is not applicable since Mr. Valish is not engaged in any business or profession. Also 194M is not applicable in this case because 194M does not cover rental income. So I hope you guys are okay with this. So in this case, TDS liability is not attracted. 194I is not applicable since Mr. Valish is not engaged in any business or profession, and 194 IB is not applicable because the rental amount that Mr. Valish is paying is rupees 50,000 per month, and for the applicability of section 194 IB, it should be more than rupees 50,000. So I hope you guys are clear. Okay. Moving forward, Mr. Hari is an interior decorator declaring profit under section 44 ADA. Sir, what is special about 44 ADA? You can opt for section 44 ADA if you are engaged in specified profession. Is interior decoration profession is a specified profession? Yes, sir, it is specified profession for the purpose of 44 ADA. And another very important aspect about 44 ADA, you can opt for section 44 ADA only if your gross receipt is up to rupees 50 lakh. So in this case, as your gross receipt is up to rupees 50 lakh, you are eligible to opt for section 44 ADA. But sir, this is for the previous year 22-23, as he has opted for section 44 ADA in previous year 22-23. But dear, read few more words. And earlier previous year also means Mr. Hari is opting for section 44 ADA from last many years. So it indicates that the gross receipt from profession of Mr. Hari is rupees 50 lakh or up to rupees 50 lakh. It is not exceeding rupees 50 lakh. Okay. So I will not take much of your time. Okay. Mr. Hari has to pay the brokerage of rupees 10 lakh to Mr. Lal to buy residential property. So dear friends, if you are paying brokerage, the primary TDS section is 194H. Okay. But for the individual or HUF, 194H is attracted. For the individual or HUF, 194H is attracted if in the preceding previous year your gross receipt from profession exceeds 50 lakh or turnover from the business exceeds rupees 1 crore. But tell me, is the gross receipt from profession of Mr. Hari is exceeding rupees 50 lakh in the preceding previous year? No, sir. How can I say that? Because Mr. Hari is continuously opting for 44 ADA, and you can go for section 44 ADA only if your gross receipt is up to rupees 50 lakh. It clearly indicates that 194H TDS is not applicable in case of Mr. Hari. Means Mr. Hari, when making the payment of brokerage, is not liable to make TDS under section 194H. But hold on, sir. As I have said, there is an alternate TDS section for three kinds of payment. What are these? Contract charges, brokerage, and fees for technical services, professional services. But sir, for the applicability of section 194M, the conditions are quite harsh. Like, you are making payment to a resident and the aggregate of the payment in a financial year should exceed rupees 50 lakh. Only then 194M TDS is applicable. Okay. So Mr. Hari is making payment of brokerage to Mr. Lal to buy a residential house. Okay. Dear friends, please. As he is making payment to Mr. Lal, but that payment is only rupees 10 lakh. But for the applicability of section 194M, it should be more than 50 lakh. Okay, I agree with you that the payment of brokerage is subject to section 194N. But sir, you are also required to satisfy the monetary threshold which has been provided in section 194M. Are you guys getting? And that monetary threshold is of more than rupees 50 lakh, but you are paying only rupees 10 lakh. So in this case 194M is also not attracted. Please dear, please listen me very carefully. When Mr. Hari is making the payment to Mr. Lal, 194H is not attracted because Mr. Hari's gross receipt from profession is not exceeding rupees 50 lakh, and also when Mr. Hari is making payment, 194M is not attracted because the payment is not more than rupees 50 lakh. Okay. Another is and rupees 50 lakh to Mr. Shyam, a contractor for construction of residential house. Mr. Hari is also making payment to Mr. Shyam for the contract charges. Okay, so the primary section for the contract payment is section 194C, but that is not applicable if you are making payment for your individual purposes, and also if you are an individual or a chief, 194C would be attracted if in the preceding previous year your gross receipt from profession exceeds rupees 50 lakh, but this is not the case. So when making payment to Mr. Shyam by Mr. Hari, the primary TDS section of contract charges under section 194C is not attracted, and as the payment is not exceeding rupees 50 lakh because it is exactly rupees 50 lakh, 194M is also not attracted. I hope you guys are clear with this. But sir, Mr. Hari is making the payment of rupees 60 lakh, 10 lakh to Mr. Lal and 50 lakh to Mr. Shyam. Would not it cause the applicability of 194M? Dear friends, 194M applicability would be checked from the recipient or payee wise, that whether a single payee is receiving more than rupees 50 lakh or not. Yeah, the payee may have provided the services of contract, brokerage or fees for technical services. Okay, means services you can provide it maybe in any of three or all of three, but we will check the applicability of section 194M from the point of view of the recipient wise. Okay, so in this case Mr. Hari is not liable to make TDS in any of this section. So our correct option is okay, the first option is right, A. So we are moving forward. So dear, here we have given the detailed explanation of each and everything, so you can refer it later on. Okay. MCQ 5, Mr. Sanjay, salaried employed. Okay dear, please, a salaried employed, as you are a salaried employed, most of the TDS sections are not applicable in this. In your case, pays brokerage of rupees 40 lakh to Mr. Hari. Brokerage primary provision is section 194H, but as Mr. Sanjay is a salaried employed, 194H is not applicable in him in this case. And but sir, one alternate provision is also there in the name of 194M, but for its applicability the payment should exceed rupees 50 lakh, but as you are paying only rupees 50 lakh, Mr. Sanjay is not liable to make TDS either under section 194H or 194M. Okay, but sir, story is not over yet. Also, Mr. Hari, his father, a retired pensioner. What it indicates that Mr. Hari is not engaged in any business or profession. As he is not engaged in any business or profession, okay sir, read further. Makes contract payment of 15 lakh, 25 lakh and 12 lakh to Mr. Rajiv. Mr. Hari is making payment of contract payment to Mr. Rajiv, and the cumulative payment I think is rupees 52 lakh. Sir, as he is making the contract payment, the primary TDS provision would come under section 194C, but in this case section 194C is not applicable as Mr. Hari is not engaged in any business or profession, and the sum paid is for the personal purposes of the individual. Okay, but yeah, in this case section 194M would be attracted because the aggregate payment to an individual, to an resident individual, exceeds rupees 50 lakh, because the cumulative payment that Mr. Hari have paid to Mr. Rajiv is rupees 52 lakh. So Mr. Hari has to make TDS under section 194M while making the last payment to Mr. Rajiv, as it will take the total exceeding rupees 50 lakh. Okay, so in this case Mr. Sanjay is not liable to make TDS, but his father Mr. Hari has to make TDS while making payment to Mr. Rajiv. Okay, Mr. Hari is required to make TDS, but Mr. Sanjay is not required, so the correct option is D. Okay sir, you are taking lot of amount of time. Dear, these MCQs require in-depth discussion. How can we skip this? Okay. Kunal and Company LLP engaged in manufacturing business. Withdraw from its bank account rupees 125 lakh by cash. Dear friends, if you are withdrawing money from bank, then section 194N is applicable, which provides that if you are a regular filer of ITR and the amount that you are withdrawing is up to rupees 1 crore, then okay. But if you are withdrawing more than rupees 1 crore, then the amount that you are withdrawing which is above rupees 1 crore, on that portion 2% of TDS TDS is required to be made. But if you are a non-filer of ITR, then the threshold would be rupees 20 lakh. So as you are withdrawing more than rupees 20 lakh, 194N would be attracted, and from rupees 20 lakh to rupees 1 crore at the rate of 2%, and above rupees 1 crore at the rate of 5%. That we have given all these things, we have given here in great detail. So Mr. Kunal, Kunal and company has withdrawn rupees 125 lakh. So is section 194N triggered? Yes sir. As you withdraw more than 1 crore, section 194N will be triggered. Okay, but sir, here the words are mentioned that the withdrawal exceed the individual withdrawal does not exceed rupees 2 lakh. There is no criteria of any kind of individual withdrawal limit for the applicability or non-applicability of section 194N. So these words in bracket are totally irrelevant. But sir, the purpose of withdrawal was buying agriculture produce. Dear friends, if you are buying agriculture produce for manufacturing, you are not subject to 194N exception. Yeah, there is 194 exception which is concerned with agriculture, that if the withdrawal is being made by the commission agent or trader operating under agriculture produce market committee and they are registered under the means relevant act, then 194N is not attracted. But Kunal and company is not commission agent, neither trader, so 194N would be attracted in this case, and there is no exception under which Kunal and LLP is covered. Okay sir, then without taking much time, how much money that they are withdrawing? 125 lakh. Above 1 crore means 25 lakh. At the rate of 2% means 50,000. 25 lakh into 2%, 50,000. So here the TDS would be attracted and the amount of TDS would be rupees 50,000. So the correct option is going to be B. Okay, quickly we are moving further. Okay. I think next question is also related with this. Okay. The following are the details of cash withdrawal from Canara Bank by Mr. Ravish during the previous year 22-23, 16 lakh, 55 lakh, and 28 lakh. So these all three withdrawals are made in the previous year 22-23. The cumulative amount that we has been withdrawn is 16 plus. The cumulative is 99. So all my bright and young students, tell me, is section 194N triggered? No sir, 194N is not triggered, because 194N is triggered only when the withdrawal exceeds rupees 1 crore. But sir, this is half truth. This is half truth or half fact. 194N is triggered when the withdrawal exceeds 1 crore, but only in case of those assessees who are the regular filer of ITR. If say I have not filed my ITR for last 3 years, then 194N will be triggered as I have withdrawn more than rupees 20 lakh. As I have withdrawn more than rupees 20 lakh means the threshold will reduce from 1 crore to rupees 20 lakh. I hope everybody is clear. Okay. As in this case, Mr. Ravish has not filed his return of income. So for the case of Mr. Ravish, what is going to be the threshold limit, sir? 20 lakh. So as Mr. Ravish has withdrawn more than rupees 20 lakh, 194N will be triggered, and 99 lakh minus 20 lakh means 79 lakh. At the rate of 2%, the TDS would be, the amount of TDS would be, sir, I think 1,58,000. Okay. So the correct option is A, 1,58,000. But sir, the rate will not change. Only the limit will change. Dear friends, limit will change. Also the rate will change. Limit will change means the threshold has been reduced from rupees 1 crore to rupees 20 lakh. And if the withdrawal is more than rupees 1 crore, then that part of withdrawal that exceeds rupees 1 crore, the TDS rate would be 5% instead of 2%. Okay. So it indicates that why should you be the regular filer of ITR and have the constant visit to your chartered accountant. Okay. Mr. Ganesh is running a steel factory. Mr. Ganesh is running a steel factory means individual or HUF. That the total turnover of the factory in financial year 21-22 amounts to 2.5 crore. Okay, means 2.5 crore. Mr. Ganesh turnover from factory is rupees 2.5 crore, means exceeding rupees 1 crore. So Mr. Ganesh is subject to most of the TDS provisions. Okay. The estimated turnover for 22-23 is likely to exceed rupees 3 crore. That's very good. On 10/4/2022, he availed consultancy services from a Delhi-based chartered accountant. Dear friends, when you are taking the consultancy services from a chartered accountant, primary TDS provision is under section 194J, and for the applicability of 194J, if you are an individual HUF, the receptor from the profession should exceed rupees 50 lakh, or the turnover from business should exceed rupees 1 crore. But in this case, But in this case, tell me, is that turnover of Mr. Ganesh exceeding rupees 1 crore? Yes sir, because his turnover in financial year 21-22 is rupees 3 crore, which is more than rupees 1 crore. Sorry, it is 2.5 crore basically, but still it is more than rupees 1 crore. Okay. So 194 GS applicability is very probable. Sir, 194 Gs, for the applicability of 194 Gs, the payment should exceed rupees 30,000 because the threshold is rupees 30,000 and you are paying rupees 1,84,000, means another hurdle is fulfilled. So here, while making the payment to the chart accountant, you are required to make the TDS under section 194J. And what is the rate at which the TDS has to be made? At the rate of 10% of the amount paid. What amount you have paid? 184. The 10% is 18,400. So Mr. Ganesh is liable to make the TDS of 18,400, and whatever TDS you have made, you have to deposit it to the government by the 7th of next month. But if you are making the TDS in the month of March, then you have to deposit it to the government by 30 April. Okay. So Mr. Ganesh has to make a TDS of rupees 18,400, and as the TDS relates to 10/4/2022, means April 2022, the TDS shall have to be deposited by 7th May 2022. So the correct option is going to A. The correct option is going to be A. Okay. I hope I am not taking much of your time. So here we have given the detailed explanation of each and everything. Okay, moving further, Mr. Harsh has to pay rupees 3 lakh to plan your trip. Okay, for a travel agency. As you have seen the travel agency, you should immediately recall the TCS provision under section 206C(1)(g). Okay. For holiday packages in Singapore and Malaysia for himself and his wife. Okay. He obtained a loan of rupees 10 lakh for higher education of his son studying in Columbia University, New York on 2023 from SBI. Okay, and remitted under the LRS, means liberalized remittance scheme of RBI, the said sum through the same bank, that is SBI, which is also an authorized dealer. Very good. Is tax required to be collected at source? Dear friend, whenever you are remitting money outside India, you have to make. Okay, whenever you are remitting money outside India, your authorized dealer has to make TCS from you, or has to collect TCS from you as provided in section 206C(1)(g). If you are remitting money outside India for the purpose of holiday package, you are enjoying pay tax to the government. So whatever amount you are remitting, 5% of that has to be collected from you by the authorized dealer as TCS under section 206C(1)(g). But sir, the only purpose of remittance of money outside India is not holiday. So if you are remitting money for the purpose other than holiday, like sir, for example, let's say your family is settled in foreign and you are remitting some amount for their maintenance purposes. So as you are remitting amount for the purpose other than holiday or tour packages, the authorized dealer shall collect tax at the rate of 5%, but on the amount exceeding rupees 7 lakh. So if you are remitting, let's say rupees 10 lakh, then the TCS will be made only on rupees 3 lakh at the rate of 5%. But sir, in India there is a huge craze of foreign study. So let's say if you are remitting money for study purpose, let's say you are remitting money to any person who is studying abroad, and you have taken a loan, you have taken an educational loan, and after taking that loan you are remitting that money. So on that, as you are remitting money from the loan taken from a financial institution, on the amount exceeding rupees 7 lakh, TCS will be taken at the rate of 0.5%. But sir, let's say I am remitting money for education purposes, but from my personal savings, then on the amount exceeding rupees 7 lakh, TCS will be made, but at the rate of 5%. Sir, why this discrimination? Dear friends, we can't do anything. Okay, so everything has been mentioned in this here, so you should read it. Okay. Now, dear friends, Mr. Harsh paid rupees 3 lakh to plan your trip at travel agency. So on this rupees 3 lakh, without any threshold, the TCS would be at the rate of 5%. Okay, but Mr. Harsh has also remitted rupees 10 lakh, but the remittance is from a loan taken for education purpose. So on this amount of rupees 10 lakh, first 7 lakh will be ignored, or first 7 lakh would be allowed. So on rupees 3 lakh, TCS would be at the rate of 0.5%. So the correct option is going to be, okay, tax has to be collected by the travel agency at the rate of 5% on 3 lakh. On the 5% of 3 lakh means what is this 3 lakh? Sir, holiday package. And at the rate of 5% on 3 lakh by SBI. Sir, SBI has been remitted the money as a loan. No, sir, but since it is taken from by the way of a loan, so not at the rate of 5%, but yeah, at the rate of 0.5%. So the correct option is D. Okay, so the correct option is D. So dear friends, in here we have given the detailed explanation. Moving further, Mr. Mahesh is engaged in the business of trading car accessories. Engaged in the business of trading car accessories means Mr. Mahesh is seller. His turnover for financial year 21-22 and 22-23 is 11.5 crore and 9.75 crore respectively. XYZ Limited placed an order for purchase of car accessories, means XYZ Limited is buyer. It is buyer, and it has placed the order of rupees 90 lakh, means more than rupees 50 lakh. Okay, so the question is that is a TDS or TCS provision is going to be attracted here? Yes, sir. Dear friends, on the purchase and sale of goods, recently in India two provisions has been inserted. One is for TDS under section 194Q. TDS under section 194Q, that says, if you are a big buyer, so sir, what is the criteria of being a big buyer? If your turnover in the preceding previous year exceeds rupees 10 crore, then we will consider you as a big buyer. Okay, and if you are making the purchase, from a particular seller of an amount exceeding rupees 50 lakh in a financial year, then on the amount exceeding rupees 50 lakh, you have to deduct tax at the rate of 0.1%. 0.1%. But sir, let's say if that buyer is not a big buyer, means his turnover in the preceding previous year is not exceeding rupees 10 crore, then if you are a big seller, sir, who is going to be a big seller? If your turnover in the preceding previous year exceeds rupees 10 crore, and if you have made a sale to a particular buyer in a financial year exceeding rupees 50 lakh, then on the amount exceeding rupees 50 lakh, you have to collect tax at the rate of 0.1%. Means in both the cases, the rate of tax is same, the threshold is same, and the manner of computation is same. Okay, but section 194Q have a priority over TCS under section 206C1H. Means section 206C1H. Sir, why? Okay, sir, why? Good question, sir, why? Okay, dear friends, TDS under section 194Q would be attracted when the buyer is crediting the sum in his books or making payment whichever is earlier, means the normal provision. But the seller will collect the tax as per section 206C1H only at a time of receipt of sum from the buyer. It means that government will realize or government will recover the tax earlier if it is in the mode of TDS under section 194Q rather than TCS under section 206C1H. I hope now you are clear with that why TDS have a priority over TCS under section 206C1H. Okay, so sir, so in these type of questions we should first analyze from the point of view of the buyer, because TDS have a priority over TCS. So sir, buyer is XYZ Limited, and it is a big buyer because you can see here it is given that in the financial year 21-22 its turnover was rupees 15 crore, which is more than the required turnover of rupees 10 crore. So the first obligation on making TDS is upon XYZ Limited, and XYZ Limited has to make TDS at the rate of 0.1% on rupees 40 lakh, means 90 lakh minus 50 lakh means 40 means at the rate of 0.1% on rupees 40 lakh means 4,000 rupees. I think 4,000 rupees, yes sir. So as in this case the TDS under section 194Q is applicable, Mr. Mahesh is not required to collect tax at source under section 206C1H. But sir, what is the guarantee that XYZ Limited will make the TDS? Because here the last line is very important. You may assume that X Limited complies with all its TDS obligation, means XYZ Limited will also comply with section 194Q TDS obligation. So here TCS under section 206C1H will have means we will not make TCS under section 2061H, but TDS under section 194Q will be made. Okay, so Mr. Mahesh is not required to make TCS because XYZ Limited is liable to make TDS of rupees 4,000. So the correct option is, since Mr. Mahesh turnover, since XYZ Limited is liable, so the correct option is A. Okay, so moving further. So dear, here we have given the detailed explanation between differences between 194Q and 2061H. Do read, this is going to be very helpful for your exams. Okay, moving further. Okay, dear friends, MCQ 11, 12, 13 deals with penalty on income discovered during raid. Dear friends, raid occurs under section 132 of the Income Tax Act. During raid, usually the income tax department discovers undisclosed income, undisclosed assets, etc. If they have discovered undisclosed income, undisclosed asset, first they will try that you come forward and make a voluntary compliance. Let's say a raid has occurred in the premises of Mr. A, and there is an unaccounted money of say rupees 1 crore has been discovered during raid. Should penalty be levied on Mr. A? Yes, sir. If there is no penalty, then everybody will conceal income, and whenever there would be raid, no issue because there is no penalty. So penalty is must. Okay. So we agree that you have concealed income and it is being discovered during raid. Okay. But still, the department wants a voluntary compliance from the SSC. And if SSC makes the voluntary compliance, department will reward SSC. So reward in what form? In the form of a lower penalty rate. Sir, this is not a reward. For the department, it is a reward. It is a reward. Okay. A lion said to a man that I will give you a reward. Man said, what? So where is the reward? Lion said, I have not eaten you. That is a reward for you. Okay. So dear friends, 271AA says that if you make a voluntary compliance, a reward will be given to you, and the reward is the lower penalty rate of 30%. But if you have not made the voluntary compliance, or if you have failed to comply with any of the conditions of voluntary compliance, then the penalty rate would be 60%. Okay, then sir, what are the conditions of voluntary compliance, or what are the voluntary compliance and SSC has to be made for a lower penalty rate? There are 4 conditions that SSC has to satisfy cumulatively. And what are these conditions? See with me. First is you have to accept or declare the unaccounted money on the statement made under section 194 under section 132(4). Dear friends, you may be aware that when a raid is occurred, a statement is being taken from the SSC under section 132(4), which may be used as an evidence against the SSC. Okay, so when you are making the statement, accept all the undisclosed income. Okay, second is explain the source from where you have got these assets. So first is accept, then explain the source. Third is pay tax, interest in respect of those undisclosed income. And fourth is declare that income and asset in the next RTR that you are filing. If you make all these compliances, the rate of penalty would be 30%. And if you have made the mistake in any of the compliances, then the rate of penalty would be 60% of the undisclosed income. So I hope you guys are aware, you guys got the clarity. And here we given the detailed explanation that how it amended and so on and so forth. So what was the provision before Finance Act 2012, then what happened by Finance Act 2012, then what is being done by Finance Act 2016. So if you are interested in reading, you can read from here. Okay. So in the course of such operation under section 132, in April 2022, Mr. Hari makes a declaration under section 132(4). Means Mr. Hari successfully completed one of the steps, that he has made a declaration under section 132(4). Okay. Mr. Hari explains the manner in which the income was derived. Means another step is being completed by Mr. Hari. So Mr. Hari is moving towards the beneficial rate of penalty, of 30%. Okay. Now also he pays the interest together with interest. Means he pays the tax together with interest. Means third condition is also complied with. But sir, however, he does not disclose the income in the return of income filed. So Mr. Hari has not completed all the steps. So Mr. Hari will not be considered to have made the voluntary disclosure. As Mr. Hari has not made the voluntary disclosure, the higher rate of penalty of 60% will be applicable in this case. I hope you guys are clear. It is clear to you guys. So the correct option is going to be D. Okay, moving further, a search under section 132 was carried out in case of Mr. M on 2012-2022. Okay, during the course of search, the assessee admitted the additional income of 50 crore. Means first step is completed for the financial year. While filing his return of income, M did not declare the said income. So, sir, you have to declare the return of income whether you are filing the return of income voluntarily or in compliance with the notice. So, you have not disclosed the additional income or the income underrated, so penalty would be 60% of the undisclosed income. So what is the amount of undisclosed income, sir? 50 crore. Its 60% is, I think, rupees 30 crore. Okay, so the correct option is going to be D. Okay, so moving further, normal MCQ question number 13. In the course of such operation under section 132, Mr. Akash makes a declaration. Means first step is completed. He also explains the manner. Means second step is completed and pays the interest together with and pays the tax together with interest. Means third step is also completed and declares such income in the return. Means Mr. Akash is India's most voluntary compliant person. Okay, is penalty leviable in this case? Sir, Mr. Akash has done everything. Should not government drop penalty in this case? No, sir, no. Penalty would be there, but yeah, we are giving you a reward in the form of lower rate of penalty, means 30% penalty. Otherwise penalty would be 60%. Okay, yes, penalty of 30% of undisclosed income would be attracted even if Mr. Akash has voluntarily made a declaration. So the correct option is C. Okay, without taking much time, moving further. Okay, power to collect information. Dear friends, under section 133B of Income Tax Act, under section 133B of Income Tax Act, the income tax authorities can collect certain information from you which is relevant or useful for the purpose of Income Tax Act. So if they want to collect certain information, they can enter into your premises, and they can enter into your premises during which your premises is kept open for business. Okay, but yeah, they cannot remove or cause to remove any books of accounts etc. from your premises. If they want to remove any books of accounts etc., then they have the option that they should make a survey under section 133A of the Income Tax Act, under section 133A of the Income Tax Act, or they should make a raid under section 132 of the Income Tax Act. Okay, but if they are only if they want to collect only certain information, then they cannot remove any books of accounts or documents from your place. Okay, which of the following statements are correct in relation to power Income Tax Authority to collect information? The Income Tax Authority can enter into the place of assessee only after sunrise and before sunset. No, sir, they can enter in those hours for which the business is kept open for public. The Income Tax Authority can enter only during the hours for which the business is. Oh yes, sir. So the option point number 2 is correct. The Income Tax Authority may impound. No, sir, they cannot impound. Okay, the point 2 and 4 is correct. So the correct option is D. Moving further quickly. Okay, the assessing officer within his jurisdiction surveyed a popular cyber cafe at 1 AM in night. Okay, so sir, if you are making the survey, recently there was a survey conducted by the Income Tax Authority on BBC. So if you are making a survey, the survey can be made if the survey is being made in the place of business. Okay, if the survey is made in the place of business, then the survey can be made at any time for which the place is kept open for the business. Okay, but let's say if the survey is made in other place, like let's say a residential place, then the survey can be made only after sunset, after sunrise and before sunset. Okay, and when the survey is being conducted by the authority, they can impound or retain the books of accounts after recording the reasons of doing so for a maximum period of 15 days, and if they want to retain it for more than 15 days, they have to take the approval from the higher authorities. Okay. So in this case, assessing officer has a jurisdiction and he has made survey at 1 AM in night. Sir, 1 AM in night, the sun has already set. Dear friends, we are not concerned with the sunset because cyber cafe is the place of business, and in cyber cafe you can make the survey during those hours for which the cyber cafe is kept open for business, and the cyber cafe is open for public between 2 PM and 2 AM. Means 1 AM is within the within the business time. So entering the cyber cafe at 1 a.m. in night is in line, is as per law. Okay. Thus, cyber cafe, okay, he impounded and retained in his custody books of accounts and documents inspected by him. There are two conditions. First is that you should have to record the reasons, and the maximum period of impounding can be 12 days, means 15 days, and the reasons are recorded, and the impounding is for 12 days, means both the conditions are complied with. Means entering into cyber cafe at 1 a.m. at morning is also in order, and retaining and impounding books of accounts for 12 days is also in order. Okay, so the correct option is A. So moving further quickly, okay, Mr. Ram, born on 1/4/1963, has a gross total income of 290 for assessment year for assessment 23-24, comprising of his salary income. Means Mr. Ram has income from salary or rupees 290. He does not claim any deduction under chapter 6A. He pays electricity bill of rupees 10,000 per month, means 1,20,000 per year. He made a visit to Melbourne along with his wife in the month of Feb 2023, for which he has incurred rupees 1,20,000. Remaining 80,000 is being incurred by his son residing in Melbourne. Question is Mr. Ram required to file his return of income? Yes, sir. Why? Because the annual electricity payment by Mr. Ram exceeds rupees 1 lakh, and it is one of the conditions of filing the return of income. But the question is not so easy. Yeah, it is clear that Mr. Ram is required to file the return of income, but question is under what condition, what because of which reason. So dear friends, there are various criterias or means conditions fulfilling of which you may be required to file the return of income. And the very first and the very basic condition is if your total income exceeds the basic exemption limit. If your total income exceeds the basic exemption limit. Okay. Here the total income of Mr. Ram is 290. First we have to see what is the basic exemption limit applicable for Mr. Ram. Sir, basic exemption limit is rupees 2,50,000. Yes, dear, I agree. But if you are a person of 60 years or more at any time during the previous year means if you talk about previous year 22-23, it is between 1/4/2022 and 31/3/2023. So if your age is 60 or more at any time during this timeline, then the basic exemption limit applicable in your case is rupees 3 lakh. Okay, sir, if the date of birth of Mr. Ram is 1/4/1963, then technically he would be of the age of 63 on 1/4/2023, means previous year 22-23 crossed and previous year 23-24 came. But dear, here I would like to attract your kind attention towards a case law of the Supreme Court in the case of 𝗪𝗶𝗱𝗲𝗪, I think, and CBDT circular, where they are saying is that for legal purposes the anniversary of the person would be considered to be attained 1 day before. Means Mr. Ram would be considered to have attained the age of 60 years on 31/3/2023 itself because of Supreme Court judgment and CBDT circular. Okay. So, as Mr. Ram is a person of 60 years or more during previous year 22-23, the basic exemption limit applicable in this case is rupees 3 lakh, and as the turnover as the gross income of Mr. Ram is only rupees 2,90,000, Mr. Ram is not required to file ITR because his income is not exceeding the basic exemption limit. Okay, but sir, he is paying the electricity bill of exceeding rupees 10,000 per month, which translates to 1,20,000 per month, which is more than the threshold of rupees 1 lakh per month. So Mr. Ram is required to file ITR, but because of the electricity bill condition, not because of the basic income condition. Okay, so Mr. Ram is required to file ITR because he pays electricity bill. So the correct option is C in this case. So moving forward. Okay, A Limited filed its return of income for assessment year 23-24 on 30th September 2023. The return is selected for regular assessment under section 143.3. Dear, if you want to make a regular or scrutiny assessment, you have to issue notice under section 143.2, and the time limit of issue of such notice is within 3 months from the end of the financial year in which the return has been furnished. The return has been furnished in September 2023, end of the financial year is 31/3/2024, and within 3 months means 30th June 2024. So the correct option is A. Okay. Moving forward, which of the following cannot be adjusted in computation of total income while processing the return of income under section 143(1)? Dear friends, when the return of income is being processed under section 143(1), there are 5 items which would be automatically adjusted without the need of any scrutiny assessment or without the need of assessee department interaction. And what are these 5 items? Sir, any arithmetical error in the return. Second is any incorrect claim apparent from any information in the return. Any disallowance of loss claimed if the ROI of the previous year furnished after the due date. The disallowance of expenditure and increase in income indicated in audit report, because here you know that audit report is required to be furnished 30 days prior to the date of filing the of the due date of furnishing idea. Okay. Disallowance under section 10AA or chapter 6A heading C deductions if ROI is not furnished within the due date. Dear friends, if you are not furnishing the ROI within due dates, there are severe consequences, and one of such consequences is that you cannot carry forward for set off the losses except the losses under the house property and unabsorbed depreciation. Second is you are not eligible for section 10AA exemption or chapter 6A heading C deduction. So it is very important to file ITR on time. You have to file the ITR, but also file the ITR on time. Otherwise, there are many things that you are going to miss. Okay. So, dear friends, these are the list of the items that will be automatically adjusted while the processing of return under section 143(1). So, any arithmetic error in the return? Yes, sir. Incorrect claim? Yes, sir. Disallowance? Yes, sir. But dear, if there is any discrepancy in form 26AS, then it has to be rectified manually, and there is no automatic rectification or adjustment concept for form 26AS items discrepancy, which basically indicates the TDS or TCS means the TDS record of the SSC. So this has to be done manually, and there is no automatic rectification concept. So the correct option is D. Without taking much time, moving further. Okay, Mr. Rajesh is agreed by the order passed by Commissioner of Income Tax. Please, who has passed the order in this case? Commissioner of Income Tax. So, if the Commissioner has himself passed the order under the Income Tax Act, and if you want to appeal in this case, then dear, the hierarchy, the appellate hierarchy is basically what? The first line of appellate and the first person under the appellate hierarchy is CIT appeal or the Commissioner of Income Tax appeals. Okay, within how many days you have to file appeals? 30 days. Another is ITAT, you have to file within 60 days. Then High Court, you have to file in 120 days. Okay, and then obviously the Supreme Court. So to the Commissioner appeals, you will go against the order of the assessing officer, assessing officer who is below the rank of the Commissioner appeals. Otherwise, the Commissioner of Income Tax and Commissioner appeals are standing at the same level. They are the same hierarchy or the same rank person of the department. So you cannot go to the Commissioner appeal against the order of the Commissioner, because both of them are standing at the same organizational hierarchy in CBDT. I hope you guys are clear. Okay. So then, sir, if I cannot go to CIT, then should I go to the High Court directly? No, sir. You have to go to ITAT within 60 days. Okay. Then he cannot file appeal to Commissioner appeals. You have to go to ITAT under section 253 within 60 days. So the correct option is D. The time limit of making the application to ITAT is, dear friends, means 60 days from the date of the communication of the order for which you want to make an application. Against which you want to make an application. Okay. Which of the following order is not appealable before Commissioner appeal? Dear friends, the order of assessing officer below CIT is appealable before Commissioner appeals. But in our Income Tax Act, there is a concept of dispute resolution panel under section 144C, which is equivalent to Commissioner appeals. It is also the first line. It is also the first appellate authority in certain cases. So if the assessing officer has passed an order with reference to the directions of DRP, then it means that order is as equivalent to made by CIT. It is not appealable. Before CIT appeals, you have to go to the ITAT. Okay. Sir, an order under section 271B, yeah, this is made by assessing officer. You can appeal to CIT appeals. So the question is which of the following is not appealable? An order under section 163 treating the assessee as an agent of non-resident. Yes, sir, you can take the appeal to the CIT appeals. An order of assessment passed by assessing officer in pursuant of the direction of DRP, it is as good as that the order is being made by the CIT. So it is not appealable. Before CIT appeals, you have to go to the CIT. You have to go to the ITAT. So the correct option is C. Okay. Coming forward, Mr. X is agreed by the order passed under section 144(3) by the assessing officer. So Mr. X the scrutiny assessment of Mr. X is being made by the assessing officer under section 144(3). Against this, Mr. X can go to the CIT appeals. And what is the time limit that Mr. X has to go to the CIT appeals, sir? Within 30 days. Okay, Mr. Y is agreed by the order passed by the Director General. Dear friends, Director General is as good as CIT. So Mr. Y cannot go against the order of the Director, means General, to the CIT appeal. Mr. Y has to go to ITAT within 60 days. So the correct option is Mr. X has to file before CIT appeal within 30 days, and Mr. Y has to file before ITAT within 60 days. So the correct option is C. Okay, so dear friends, if you are thinking that we are moving very quickly, dear, we don't want to take much of your time, and here's a detailed explanation also, so you can take the reference of these also. Okay, moving further, the assessment of SSC majors LPC and associates under section 143(3) was made on 28 December 2023. The assessing officer added rupees 3 lakh for non-deduction of TDS and 4 lakh on account of unexplained investment. Means there are two additions being made by the assessing officer. One is rupees 3 lakh and one is rupees 4 lakh. Okay, the assessee contested the addition on account of unexplained investment in appeal before CIT appeals. The appeal was decided against the assessee in June 2024. What is the remedy available to the assessee in respect of the disallowance under section 40A? Dear friends, please listen to me very carefully. Against the order of assessing officer, you have the right that you can go to the CIT appeals. Assessing officer in its order gives additions or disallowances of the expenditure that you have claimed. Let's say assessing officer in its assessment order made 15 addition, but you have taken only 10 addition to the CIT appeals. You have a right that you can take all the additions or you can take any number of the additions. Earlier, what used to happen, that for the additions that are being taken to the CIT appeals, it will be decided by CIT appeals. But for the unappealed items before the CIT appeals, assessee usually used to go to a revision. For revision under section 264. Revision under section 264. Okay, because the revision application can be filed within 1 year and appeal to CIT appeals can be filed only within 30 days. This used to take a huge amount of time. And huge increase of expenditure by the department. So that was amended and it was provided that even if you have taken part of the order of the assessing officer to CIT appeals, it would be assumed that remaining part of the order is being merged with that part of the order that you have applied for or that you have appealed for to the CIT appeals. Means doctrine of total merger or complete merger. Means no part of the assessment order remains to be to go for revision under section 264. I hope you guys are getting. But sir, don't you think that this is against the assessee? Dear, yeah, you may think that it is a bit harsh and goes against the assessee, but these are essential to streamline the tax aspects in India. Dear friends, I don't know you don't know. The transfer pricing demand of more than rupees 2 lakh crore is held up in litigation in various stages. More than rupees 2 lakh crore of transfer pricing tax demand is being held up in litigations. So these are some of the steps taken to reduce the time which are being consumed in the litigation processes. Okay. Then sir, what is the option left for the assessee? Assessee cannot go for revision. Yeah, if there is a mistake apparent from record, then assessee can go for a rectification application under section 154. Okay. So can assessee what is the remedy available to the assessee in respect of disallowance under section 40? Means that part of the order of assessing officer which assessee has not initially appealed before the CIT appeals. Can assessee go for revision under section 264? No sir, because this particular part will be considered to have merged with the appeal that you have made to the CIT appeals. So you cannot go means you cannot go for the revision under section 264. Yeah, you can go for a rectification application under section 154 if there is any mistake apparent from record. Okay. So the correct option is B. Okay. So dear friends, here we have given the detailed explanation, so if you want you can read. Moving further, Mr. Mahesh is found to be the owner of 2 gold chain, means unexplained asset. Unexplained asset is treated as income of the assessee in the previous year in which it is found, provided assessee offers the proper explanation. But you can see which is not recorded in the books, and he could not offer any satisfactory explanation, means it would be treated as income of the assessee under section 69A, and the income under section 69A is liable to tax at the rate of 70% under section BBE at the rate of 70%. How this 70% came, sir? 60% basic rate plus 25% surcharge and 4% health and education cess. So the cumulative rate is 78%. So what is the amount of gold chain, sir? 1,40,000 into 2 means 290 into 78%. 290 into 78% means 226,200. Acha. Okay, so the correct option is B. Moving further quickly, penalty on underreporting of income under section 270. Dear friends, there are various cases of penalties on underreporting of income, but in all these MCQs, means 24, 25 and 26, only one concept is being given, which is when the assessee do not file its return of income, when the assessee do not file ITR. So dear, when the assessee has not filed its his ITR and the assessed income, sir, you have not filed the ITR, the best judgment assessment can be done under section 144. Let's say the income assessed under the best judgment assessment is more than the basic exemption limit. Listen to me very carefully. You have not filed your ITR, your income is assessed under section 144, the best judgment assessment, and if that assessed income is more than the basic exemption limit, it amounts that you have underreported the income. It means that you have underreported the income. Okay, and on that underreported income, tax amount would be calculated, and penalty would be levied at the rate of 50% or at the rate of 200% if the underreporting is on account of misreporting of income. Dear friends, underreporting was on account of misreporting of income, that you will consider only if the question specifically mentions. Otherwise, you will always consider underreporting on account of other than misreporting of income, means the penalty of 50%. I hope the provision is clear to you. The detailed explanation is being given over here, so you guys must read this. So this is the complete background. So starting with question number 24. Mr. Ganesh and Mr. Rajesh, resident Indians born on 1/7/1962 and 1/4/1943. Dear, if you talk about Mr. Ganesh is born on 1/7/1962, means he is 60 years or more in the previous year 22-23. So the basic exemption limit in this in the case of Mr. Ganesh is rupees 3 lakh. And if you talk about Mr. Rajesh, he is born in 1/4/1943, means 80 years. So the basic exemption limit in case of Mr. Rajesh is rupees 5 lakh. Okay, both of them had not furnished their return of income, but their total income assessed is 8 lakh and 5 lakh respectively. Means Mr. Ganesh, the income assessed is rupees 8 lakh, and for Mr. Rajesh, the income assessed is rupees 5 lakh. So first, let's say we talk about Mr. Rajesh. So dear friends, Mr. Rajesh has not filed his return of income, but his assessed income, listen me very carefully, his assessed income is not more than basic exemption limit. Sir, it is up to basic exemption limit, but underreporting would be considered only when the assessed income is more than the basic exemption limit. So as here it is not more than the basic exemption limit, Mr. Rajesh will not be considered to have underreported his income, as Mr. Rajesh has not underreported income. Then for what you are going to impose the penalty under section 278? Okay, so Mr. Rajesh, no penalty under section 278. Okay, let us talk about Mr. Ganesh. Mr. Ganesh has also not filed his return of income, and basic exemption limit in this case is rupees 3 lakh, but his assessed income is rupees 8 lakh. Assessed income is more than the basic exemption limit. Mr. Ganesh will be considered to have underreported his income. What is the tax amount of Mr. Ganesh on rupees 8 lakh? Tell me quickly. Sir, 8 lakh, first 3 lakh exempt, 2 lakh 5% means 10,000, and then on 3 lakhs 20% means 60,000, means 70,000, plus 4% health and education says 72,800. Is anywhere in the question it is given that the underreporting is on account of misreporting? No sir. Then the penalty 50% means 36,400. So penalty in case of Mr. Ganesh would be 36,400, and Mr. Rajesh, no penalty would be levied. So the correct option is D. I hope everybody is clear. Dinesh, a resident individual of 47 years. 47 years implies that the basic exemption limit applicable 250. He has not filed his return of income, and his assessed income is 18 lakh. Means assessed income is more than the basic exemption limit. Mr. Dinesh will be considered to have underreported his income. What is the penalty under section 1 under section 270A? Sir, what is the tax liability on 18 lakh? Sir, it is 336,300. It's 50% means 183,300. So the penalty is 183,300. The correct option is C. Moving further quickly, Mr. Vyomesh, a non-resident individual of 61 years. Sir, 61 years. Basic exemption limit 3 lakh. No dear, he is non-resident. For him, the slab rate would be only of rupees 2,50,000 irrespective of his age. The higher slab rate of 3 lakh and 5 lakh is applicable only in case of resident individuals. Only in case of resident individual HUF. Okay. Mr. Vyomesh has not filed his return of income and slab basic exemption limit is 250. Income assessed 13 lakh means assessed income is more than basic exemption limit. Mr. Vyomesh will be considered to have underreported his income. Then what is the amount of tax liability? Sir, 3 lakh into 0.3 plus 112,500 plus 4%. Sir, 2,10,600. Is underreporting is on account of misreporting? No. Then penalty would be 1,05,300. Okay, so the correct option is B. I hope everybody is clear with this. I hope this is clear to you guys. Moving further quickly. Okay. Okay. So dear, here the detailed explanation of each and every MCQ is given, so you can refer this. XYZ Limited has failed to report an international transaction. Dear friends, if international transaction is being undertaken with an associate entity, you have to report that transaction as per the provisions of chapter 10, means transfer pricing provision. XYZ Limited has undertaken an international transaction, but the question is whether this transaction is being undertaken with an associated entity. Sir, this transaction is being undertaken with PQR Inc. And about PQR Inc., question says it is a specified foreign company. What is this specified foreign company? Dear friends, there used to be a provision. Still, the provision is still in the act, but now it is ineffective, which says specified foreign company is a foreign company in which the Indian company holds 26% or more. That provision is section 115BBD. Okay, so XYZ Limited is holding 26% or more in PQR Inc., which makes XYZ Limited and PQR Inc. associate entity as per section 92A. I hope everybody is clear. Okay, so you have undertaken an international transaction with an associated enterprise. Transfer pricing provisions would be attracted. You have to report this transaction as per the provisions of chapter 10, and if you fails to report it, then as per section 271AA, penalty equal to 2% of the value of the international transaction would be levied, and it would be considered as an underreporting of income by XYZ Limited, and underreporting is on account of misreporting of income, leading to a penalty of 200%, of tax payable on the underreported income. So dear, option A and option C both are correct, so the correct option is D. Okay. Moving forward, Mr. X made a FD of rupees 12,000 with the NBFC on 1/4/2022 in cash. Dear friends, you are making the FD or you are making the deposit or giving a loan to any person. The recipient should be very careful, because section 269SS is applicable in is there, which says that the recipient should not receive the amount in the name of deposit or loan or specified sum. What is specified sum? We will not talk about right now. The recipient should not accept that loan, deposit or specified sum if the amount of loan, deposit or specified sum is rupees 20,000 or more, and it is in the mode other than specified or allowed mode. Sir, what are the allowed or specified mode? Account pay check, account pay draft, ECS through bank account. Other prescribed mode, and what are the other prescribed mode? Credit card, debit card, net banking, Bhim UPI, NEFT, RTGS, UPI or IMPs. Okay, so let's say I am making the deposit of rupees 5 lakh with Mr. B, and the deposit is in cash. Should Mr. B accept it? No. If Mr. B accepts it, Mr. B has violated section 269SS, because Mr. B has accepted a sum of rupees 20,000 or more in a mode other than allowed mode. Then sir, Mr. B has violated section 269SS. What impact would be there? The amount that you have received in contravention of section 269SS, that the penalty equivalent to that amount would be imposed upon you as per section 271D. Means the penalty of 5 lakh would be imposed on Mr. B, means recipient, under section 271D. Okay. So moving here, Mr. X made FD of rupees 12,000 with the NBFC on 1/4/2022 in cash. So is cash allowed mode? No, this is not an allowed mode. But sir, Mr. X goes to NBFC and says to NBFC, I have came here to make an FD of rupees 12,000, and the FD is in cash. FD is in cash. You are the CEO of NBFC. You immediately recall that there is some provision known as section 269SS, which says that you should not accept a deposit of a sum of rupees 20,000 or more in cash. Are you guys getting? You asked Mr. X how much amount that you want to make the deposit. He says 12,000. You feel relaxed. Okay, because section 269SS would be violated when you accept rupees 20,000 or more. Here the amount is only rupees 12,000. So on first deposit transaction, 269SS is not violated. Hence no penalty under section 271D will be triggered. Okay. After some day, Mr. X comes again. NBFC, I want to make a further deposit. You are the CEO of NBFC. You become a little bit of nervous that this guy again came and again brought what? Bearer check. Is the bearer check allowed mode? No, sir. You asked Mr. X how much you want to make a deposit. He said 7,500. You opened the Income Tax Act and there it is given that if the amount is already being deposited by the person in other than allowed mode, and if he wants to deposit further amount, the aggregate of both is rupees 20,000 or more, then 269SS will be triggered. Mr. X has deposited rupees 12,000 in other than allowed mode. He further came with 7,500. The aggregate of both is 19,500. Is section 269SS would be violated even if you accept the second deposit? No, sir, because that is not 20,000 or more. So you feel a bit relaxed and accepted rupees 7,500 from Mr. X. But you said, Mr. X, remember, the limit is about to be crossed. Don't come with cash or bearer check. Okay. After some day, Mr. X again came and say, NBFC, I want to make a further deposit of 8,000. You became hopeless and you asked, what is the mode? He said, sir, account paycheck. You was the happiest person in there, because if you are accepting the money in account paycheck, section 269SS is not violated, whatever the amount may be, and no penalty under section 271D would be triggered. So for the third transaction, this transaction is not subject to section 269SS. So 269SS is not violated in third transaction also. Again, no penalty under section 271D. It means section 271D is not attracted in this case. Sir, you are taking huge amount of time. I agree, dear. So we will make a quick move from here now. Okay. X Limited, a domestic company, not opted for 115BAA. 115BAA provides for the concession tax rate of 22% but a mandatory surcharge of 10%. Dear friends, if you are opting for 115BAA, there would be no marginal relief because the surcharge of 10% is mandatory in all cases and surcharge rate is not changing. It is flat 10% surcharge. Okay. But here you have not opted for 115BAA, then the tax rate applicable in your case would depend upon your turnover of previous year 2021, and if your turnover is up to 400 crore, then the tax rate would be 25%. If it exceeds 400 crore, then the tax rate would be 30%. Okay. X Limited, a domestic company, not opted, has a total income of 10 crore 1 lakh. The gross receipt is 260 crore, means tax rate applicable for X Limited is 25%. Dear friends, the only purpose of this question by ICAI is to check your ability to compute tax of a company with marginal relief provisions. Because as you know that in normal situations, if the income of the domestic company is from 1 crore to 10 crore, the rate of surcharge is 7%. But as the income exceeds rupees 10 crore, the surcharge rate increases to 12%. So it is very likely that surcharge rate may be 12% because of very marginal increase in income beyond rupees 10 crore. But as surcharge rate has increased by 5%, this 5% is applicable on the entire basic tax amount. So there is a huge probability that this increase in surcharge of 5% will increase the amount of tax beyond the increase in income. Beyond the increase in income means the increase in income is, let's say, only rupees 1 lakh, but the tax amount has increased because of surcharge is rupees 15 lakh. So marginal relief concept will arise, and it will say that the increase in tax should not be more than increase in income, and if the increase in tax is more than increase in income, we will give you a marginal relief to that particular portion. Okay, so with me calculate the income of the domestic company. Dear, 10 crore 1 lakh at the rate of 25%, it is 2 crore 50 lakh 25,000. Do the calculation. Surcharge at the rate of 12%, because income exceeds rupees 10 crore, the surcharge amount is 30 lakh 3,000. But sir, there is a huge probability of marginal relief because the income beyond 10 crore has increased only rupees 1 lakh. So there is a chances of margin relief. So we have to calculate margin relief. How we will calculate margin relief? Tax on rupees 10 crore 1 lakh and tax on rupees 10 crore, because beyond 10 crore surcharge rate increases. Okay. So on rupees 10 crore the tax amount is, I have made a calculation, 2 crore 67 lakh 50,000. But on 10 crore 1 lakh tax amount is 2 crore 80 lakh 28,000. So how much? So by how much the amount of tax is increasing? Sir, 12 lakh 78,000. And by how much the income is increasing? Sir, 1 lakh. So marginal relief would be of 11 lakh 78,000, and the tax liability would be 2 crore 79 lakh 24,000. Okay, dear question MCQ 30 is exactly similar to MCQ 29. The only change is that turnover of XYZ Limited in previous year 2021 is 410 lakh. So the rate of tax would be 30% instead of 25%. And the question is exactly same. Okay, moving further. Okay, buyback of shares. Dear friends, whenever a domestic company, the company may be a public company or a private company, makes a buyback of its shares, the shares may be listed shares or unlisted shares. Then on the distributed income, on the amount of the distributed income, that company has to pay an additional income tax at the rate of 20% plus 12% surcharge plus 4% health and education, sir. Means 20% plus 12% plus at the rate of 23.296%. I hope visible to anybody. 23.296% as an additional income tax, and that income is exempt in the hands of the shareholders. Okay. So look with me. XA Limited, an Indian company. Indian company means a domestic company. Bought back its listed shares from shareholders. B Private Limited, an Indian company, again a domestic company, bought back its unlisted shares from shareholders. Means in both the cases section 115 QA would be attracted, and both the companies has to pay additional income tax at the rate of 23.296% on the amount of the distributed income, and the income and the buyback and that amount would be exempted in the hands of the shareholders under section 1034A. Okay. So both the companies have to pay additional income tax. Okay, so the first option is correct, that income in the hands of shareholders would be exempt and companies have to pay the additional income tax at the rate of 23.296%. So moving to question number 32. 𝗪𝗁 Limited, a domestic company, purchased its own listed shares on 13 August 2022. The consideration for buyback is rupees 23 lakh. The amount of additional income tax is not on the consideration of buyback, it is on the amount of the distributed income. How we are going to calculate the distributed income? Consideration for buyback less the amount received for buyback, and the amount received for buyback will be calculated as per rule 40BB, and in this case that amount is being given to you, and that amount is rupees 17 lakh. So the consideration for buyback is rupees 23 lakh, means the consideration paid for buyback is rupees 23 lakh, and the amount which was received for buyback is rupees 17 lakh. So what is the amount of the distributed income, which is the income in the hands of the associate? Sir, 6 lakh rupees, means you have to pay the additional income tax on rupees 6 lakh, which is 23.296%, which comes to 1,39,776. So this is the amount of the additional income tax the company has to pay, and that amount would be exempt in the hands of the shareholders. Okay, so dear, here there is a detailed explanation of each and everything, so do refer this. 𝗪𝗁 Limited has distributed on 30th 6 2023 dividend of 130 lakh to its shareholders. Means 𝗪𝗁 Limited has paid dividend to the shareholders. during the financial year 22-23, Gamma Limited has received a dividend. Means Gamma Limited has also received a dividend. Means it is a case of intercorporate dividend. So Gamma Limited is eligible to get the deduction under section 80M. Sir, what is the amount of deduction? Deduction under section 80M would be lower of dividend received from domestic company, foreign company, or business trust, and a dividend paid up to due date. Due date is 1 month prior to the date of filing ITR. So here the Gamma Limited has received a dividend of 108 lakh net of tax, means 120 gross. So 120 plus 30 lakh means Gamma Limited has received 150 lakh, but Gamma Limited has paid up to the due date 130 lakh, means lower of the following 130 lakh. So Gamma Limited is eligible to get the deduction of 130 lakh under section 80M. So the correct option is, dear friends, C. Okay. Okay, so here there's a detailed explanation, so you should refer this. Two tonnage tax companies, X Limited and Y Limited, are amalgamated to form a new company. Dear friends, for the shipping companies, tonnage tax provisions are being introduced to provide a beneficial or an alternate taxation regime to those companies. Dear friends, there are a lot of things that we can talk about, but I cannot take much of your time. But still, if you want to make some reference, if you see, India has a huge coastline. India has a huge coastline. If you see, this is not a correct map. If you see, India has a huge coastline, huge coastline. If you see the coastline of South Korea, it is comparatively very small than India. Even let India. If you compare the coastline of South Korea with Maharashtra or with Tamil Nadu, Tamil Nadu has a bigger coastline than South Korea, but still South Korea's shipping industry is bigger than India's shipping industry. Sir, what is this happening? Dear, that is a reality. So in order to encourage the shipping companies in India, a beneficial taxation regime in the name of tonnage taxation was being introduced very years before in the income tax. Okay, dear friends, tell me one thing. 10,000 small companies are better or 10 large companies are better? If you go by a socialistic approach, you will say, sir, 10,000 small companies. No, this is the era of capitalism. Here 10 large companies are better because they can dominate not only the country but the world, as South Korean shipping companies are dominating the world. Okay, most of the trades that are happening worldwide, South Korean shipping companies have a huge share of the transportation business. Even China is not able to compete with them. Anyhow, so issue is that we have given beneficial or favorable taxation regime to the shipping companies, but we also want consolidation in the shipping industry. Means we don't want 10,000 small companies, we want few large companies. Okay, so in order to encourage the shipping companies to merge, to amalgamate, so to consolidate the industry, a new section has been introduced, which is section 115VY. 115VY, which says if two tonnage taxation companies amalgamate, and a new tonnage company creates because of the amalgamation, for the unexpired tonnage period of these two amalgamating company, whichever is higher, it would be provided to the amalgamated tonnage company. It would be provided to the amalgamated shipping company. So let's say company A and company B, these are the two means shipping companies. Company A has the unexpired period of, let's say, 1 year of beneficial regime, and let's say company B is of 10 years. Company A, as only 1 year is left for the beneficial regime, would like to merge with company B, and let's say a new company emerges, which is company C. As 10 year is the highest unexpired period in both the cases, company C would be eligible for 10 year of tonnage taxation scheme. Are you guys getting? So this will encourage the companies to amalgamate and to consolidate, and this will lead to the consolidation in the shipping industry. Okay, so here see, two tonnage tax company X and Y are amalgamating to form a new company Z, qualifying company, and option for tonnage scheme has been okay. For X, unexpired period is 8 years, for Y unexpired period is 6 years, which is higher, 8 years. So for Z, unexpired tonnage tax period of 8 years would be allowed to it. So the correct option is 8 years, means A. Okay, moving further, Mr. Hari has an income of 52 lakh under the head PGBP. One of its business is eligible for 100% deduction under ATIA for assessment year 23-24. Means out of 52 lakh, your 35 lakh is deducted, so your income is rupees 17 lakh. Okay, the profit from such business is okay 35 lakh. What is the tax payable by Mr. Hari, assuming that no other income is there, and credit for AMT alternate minimum tax is there. Dear friends, if you remember section 115 JC, for an associate other than corporate associate, if the associate has claimed any deduction under chapter 6A heading C, 10AA or 35 AD, in those cases AMT is applicable at the rate of 18.5% of the adjusted total income. So tax payable by Mr. Hari as per normal provision of the act is 17 lakh. It is 3 lakh 35,400. Means as per normal provision 3,35,400, but as per AMT, sir, adjusted total income is 52 lakh. So 52 lakh into 18.5%, but sir, income is exceeding 50 lakh, 10% surcharge, and sir 4% health and education cess, it is 11,00530 rounding off. Okay, so as the tax payable under AMT is higher, Mr. Hari has to pay tax as per AMT, means 11,00530. But sir, as tax payable under AMT is higher, Mr. Hari is also eligible to get the AMT credit as per section 115 J, D and JE, and the amount of AMT credit is, sir, it is 765,130. So our correct option is going to be C. But sir, is it very quick that you have made? Dear friends, I don't want to take much of your time, but here's a detailed explanation that we have given, so you can refer to this detailed explanation. Okay, we have mentioned each and every point very clearly. In previous year 22-23, Mr. Ganguly, a resident individual aged 60 years, earned income from profession of 145. Okay, winning from card game 150. Dear friends, as per section 115BB, if you have any winning from card game, it is taxable at a flat rate of 30%. No basic exemption limit allowed, no chapter 6A deduction allowed. Okay, he has interest income of 40,000 and 9,000. So we can say that Mr. Ganguly has two type of income. One is normal income and another is special income under section 115BB. Special income is basically card game winning, means 150, and normal income is 145 plus 49,000 interest. It is 194. Okay. Mr. Hari has deposited, Mr. Ganguly has deposited 150 in PPF, means ATC deduction. So here ATC deduction would be allowed 150. But sir, he has also interest from savings and FD, means 80 TTB. As Mr. Hari is age of 60 years or more, he is eligible for 80 TTP deduction, and the maximum amount is 50,000. But sir, his remaining income is rupees 44,000, because you cannot claim section 80, you cannot claim chapter 6A deductions from your lottery income. Okay, so minus 44,000 maximum that we can allow. So your normal income is nil and your special income is 150. So your total income is 150. So the correct option is B. Okay, moving further. Okay, charitable trust. So different charitable trust is very important, and you should be very clear about charitable trust. During the previous year 22-23, Help Aid Charitable Trust registered under section 12AB received a donation of 80 lakh. Okay, received a donation of 80 lakh, means you have received 80 lakh rupees. Out of which 10 lakh was corpus donation, and if you invest the corpus donation in the specified mode, then you can claim the exemption under section 11-12 on that corpus donation. And Help Aid has deposited the amount in the post office savings account, means 11-5 specified mode, means out of 80 lakh, rupees 10 lakh is rupees 10 lakh relates to the corpus donation, and that is exempt because you have invested it in the specified mode. Okay, out of rupees 80 lakh, rupees 20 lakh was anonymous donation. Dear friends, as per section 115BC, anonymous donation will be taxed at a rate of 30%. But what portion of anonymous donation will be taxed at a rate of 30%? Sir, anonymous donation being whatever anonymous donation that you have received, less 5% of total receipt, or 1 lakh flat, whichever is higher. So what is the anonymous donation that we have received? Rupees 20 lakh. 5% of total receipt means 4 lakh, because the total receipt is 80 lakh or 1 lakh. The whichever is higher, 4 lakh means rupees 16 lakh of anonymous donation will be taxed at a flat rate of 30%. So simplifying things, charitable trust has received rupees 80 lakh, out of which 10 lakh is not required to apply it because you have invested in a specified mode, and out of which rupees 16 lakh is taxable at a higher rate. So remaining is rupees 54 lakh. So if you want to get the deduction, if you want to get the exemption, you have to apply. Okay, you can accumulate 15% unconditionally. So what is this 15% is? Sir, 8,10,000. So you have to apply 45,90,000. In this case, the application is only rupees 40 lakh, means under application is 5,90,000. This under application of 5,90,000 will be taxed at a slab rate applicable to an individual, and 16 lakh will be taxed at a flat rate of 30%. So what is the tax liability of trust? Is anybody interested in calculations? Yes, sir. So on the anonymous donation, 16 lakh 30% means 480, and on the under applied portion 590 as per the slab rate, 90,000 into 0.2 plus 12,500, so 3,500 plus 4,80,000 plus 4%, so it comes to 539.20. Okay, so the correct option is C. Moving further. Okay, so there is a detailed calculation. So detailed answer is given for the previous year 2022-23. A public charitable trust received income derived from rupees 10 lakh from properties and 15 lakh from voluntary contribution. So the total receipt is 10 plus 15 means 25 lakh, out of which 15% unconditional accumulation is available, means amount that you have to apply is 21.25 lakh. Okay, out of which how much you have applied? Sir, we have applied rupees 8 lakh. Plus we have repaid our loan of rupees 4 lakh. Dear friends, when you repay the loan, when you repay the principal amount of loan, in that year the application would be counted. And for the safety rider, it is given that it was not claimed as application in the earlier previous year, means 4 lakh can be claimed as application in this previous year, means previous year 22-23. So the total application is 8 plus 4 means 12 lakh. So the under application is 9.25 lakh. So the income of the trust would be 9.25 lakh. So the correct option is B. Okay, so dear, again there is a detailed explanation over here. Moving further, 𝗪𝗲𝗃𝗶𝗃 Charitable Trust registered under section 12AB have main objective as medical relief, earned rupees 2 lakh as interest on bond issued by a local authority. Dear friends, if you have earned the interest on bond issued by a local authority, that income is exempt under section 1015. Okay, and agriculture income of rupees 10 lakh of rupees 4 lakh, if you receive the agriculture income, it is exempt under section 10(1). But dear friends, recently that was amended, where it is being said that if you are a charitable trust that are eligible for exemption under section 1112, listen me very carefully. If you are a charitable trust which is eligible for exemption under section 1112, no exemption under section 10 would be available to you except 3 exemption. And what are the 3 exemption? First is 10(1) related to agricultural income, because the tax on agriculture income is the domain of the state, not the central. Okay. Another is 1023C, means the educational institution type. Last one is 1046, means the boards or authorities which are being established for public good, like Delhi Jal Board type. Okay. So apart from this, no other exemption as provided under section 10 is available to a charitable trust which is claiming exemption under section 1011. Under section 1112. So in this case, the charitable trust means 𝗪𝗲𝗃𝗶𝗃 Charitable Trust has income from agriculture, that is exempt, but that interest on local bond means local authority under section 1015, it is not exempt. So if the charitable trust wants the income to be exempt, out of this 2 lakh, it has to apply 85%, because 15% is allowed as unconditional accumulation. You have to apply 85% to get the exemption. I hope everybody is clear. Okay, so the correct option is going to be, the trust can claim an exemption under section 10(1), however exemption under section 1015 is not available. So the correct option is D. And we have given the detailed explanation here. Okay, moving further, contribution by a charitable trust to another trust. Dear friends, if a charitable trust makes a contribution to another trust, the contribution amount can be considered as an application for the donor trust, but listen very carefully. But only only in the case where the contribution is out of the current income. The contribution is out of the current income and for the purpose other than corpus donation. And for the purpose other than corpus donation, only in that case it would be counted as an application for the donor trust. So sir, let's say for example, donor trust has made the contribution out of its current income for corpus donation of the recipient trust. No application would be considered for the donor trust. Sir, the donor trust has made contribution out of its current income, but for the purpose other than corpus donation of the recipient trust would be considered as the donation or would be considered as an application for the donor trust. Sir, the donor trust has made the contribution out of its accumulated income for the purpose one, corpus, second, another. As the contribution is out of the accumulated income, whatever may be the purpose of making the donation, application is not allowed in the hands of the donor trust. So sir, in summary, what you want to say? Dear, in summary I want to say, any amount paid by a charitable trust institution out of its current income to another trust for the purpose other than corpus donation would amount to application of income. Okay, so I will not take much of your time. During the previous year 22-23, Sarva Seva, a charitable trust, made voluntary contribution not being corpus donation. Okay, dear friends, put your attention, not being corpus donation. So the donation is to another trust out of its current income. So then this would be considered as an application. An educational trust out of its current income, again application. Another trust out of the accumulated income, not an application. So the correct option is 1 and 2, means correct option is C. Okay. Would your answer in question 40 change had the voluntary contribution to the said trust being made from the corpus in the form of corpus donation? Dear, if the donation has been made in the form of corpus donation out of the current income, it would not be considered as an application in the hands of the donor trust. Means cancel, means none of the above, means correct option is okay. Moving further, taxation of REIT and its unit holders. Dear friends, REIT is basically the part of business trust which is the alternate investment kind of thing in India, and it was not too early it was being introduced in the Indian income tax act. The purpose of it is that a kind of trust would be established which will invest in the commercial real estate space in India. The investment can be made directly by the REIT or through any Indian company, in which the REIT should have at least 50% or at least 50% of the equity. Okay, so listen very carefully. If the REIT has made the investment in the properties directly, and if any rental income is being received by the REIT, that rental income is exempt in the hands of REIT but taxable in the hands of the unit holders. Sir, if it is exempt in the hands of REIT, should not be it exempt in the hands of the unit holders? Dear, then from where the government is going to the tax revenue? There should be some avenue from where the tax revenue should be should also come. Are you guys getting? So it is exempt in the hands of REIT, but it is taxable in the hands of unit holders. But sir, what is the benefit? What is the overall benefit? Ultimately, tax is being charged by the government, not from REIT, then the unit holders of the REIT. Dear friends, for unit holders, there is a slab rate benefit. The tax rate is lower as per the slab rate. Are you guys getting? They can claim ATC. Okay. So, if the property is being rented directly by the REIT, the rental income is exempt in the hands of REIT but taxable in the hands of the unit holders. If the property is being rented through an Indian company, which is basically the special purpose vehicle, then the special purpose vehicle will pay either the interest or dividend to the trust, to the REIT. Both interest and dividend is exempt in the hands of REIT. Both interest and dividend from SPV is exempt in the hands of REIT, but it would be taxable in the hands of unit holders. Means, dear friends, listen me very carefully. Whatever the income is being generated by REIT and distributed to the unit holders, it would be considered as of the same nature. So, if REIT has received interest from SPV and paid that amount to the unit holders, it would be considered as an interest from SPV. Although the unit holders have received it from the RIT and not from the SPV. Okay, so because that is basically the pass-through status of the RIT. Okay, then what is the main point? I have said that the rental income from the property is directly owned by RIT, would be exempt in the hands of RIT, but it would be taxable in the hands of the unit holders. The interest received from SPV by the RIT and paid to the unit holders would be exempt in the hands of RIT, but taxable in the hands of unit holders. The dividend received by RIT from SPV would be exempt in the hands of unit holders, but would be taxable in the hands of would be exempt in the hands of RIT, but would be taxable in the hands of unit holders. As the government has proposed this, there was a huge cry in the market. Sir, what you are doing? This is not good. We will protest. Why? Because equity investment is the most common form of investment, and government is discouraging the equity investment. Because, dear friends, there used to be a time where the capital gain used to be exempt, and there was there was also various kinds of benefits there. All these things have been withdrawn, so there was a huge cry out in the market. So the government said, listen very carefully, what government did? Government said, okay, we will give more favorable tax regime to the RIT. How? If the SPV, listen very carefully, if the SPV, that is an Indian company, if the SPV has not opted for 115BAA, then that dividend income would be exempt in the hands of unit holders. Because SPV is already paying the tax at a higher rate. But if the SPV has opted for 115BAA, then as SPV is taking the advantage of beneficial taxation regime, then we are the government, we have to run this country, we also need some tax revenue. In that case, the dividend would not be exempt in the hands of the unit holders, means the dividend would be taxable in the hands of unit holders, and whatever amount is taxable in the hands of unit holders, it has to make TDS under section 115 LBA, I think, 115 LBA. Okay. But yeah, that dividend would be exempt in the hands of RIT irrespective of whether the SPV has opted for 115BAA or not. But sir, can't the SPV opt for 115BAB? No sir, 115BAB is only for the domestic manufacturing company, and the SPV is not a manufacturing company. It is basically holding the real estate properties. Okay. Now, moving to the questions. Question number 42. RIT has distributed rupees 2 crore to the unit holders. Rental income from real estate property directly held by RIT. So dear friends, listen to me very carefully. Out of rupees 2 crore, 80 lakh rupees is basically the rental income. So this rental income is exempt in the hands of RIT, but taxable in the hands of unit holders. I hope everybody is clear. Interest from SPV exempt in the hands of RIT, but taxable in the hands of unit holders. Dividend from SPV exempt in the hands of RIT, irrespective of whether the SPV opted for 115BAA or not. And if you read in this question, A Limited being the SPV has not opted for 115BAA, means also exempt in the hands of unit holders. Okay. Cap gain on disposal of asset. Dear friends, apart from this income, every income is taxable in the hands of RIT and exempt in the hands of unit holders. So this is taxable in the hands of RIT and exempt in the hands of unit holders. Okay. So the question is, all the above income are taxable in the hands of RIT? No sir. Only the income 1 and 2 are taxable in the hands of RIT. 1 and 2 are exempt in the hands of RIT. Only income 1 and 2 are taxable in the hands of RIT? No sir. 1 and 2 are exempt in the hands of RIT. Only income 4 is taxable in the hands of RIT. Only income 4 is taxable. Yeah, only income 4 is taxable. Okay. Income referred to 1 and 2 is taxable in the hands of unit holders. Income referred to 1 and 2. 1, 2 is taxable and is taxable. Okay. Income referred to, income referred to in 3 is exempt in both cases. Income referred to 3 is exempt in both cases. Wow. So the correct option is 4. So the correct option is 4. Okay. Tax is deductible by RIT from income referred in 1 and 2. Dear friends, RIT has to make TDS on the payment made to unit holders, but only for those income which is taxable in the hands of unit holders. If any income is exempt in the hands of the unit holders, then how can you make TDS on such income? Okay, so TDS would be made by rate only on those income which is taxable in the hands of unit holders. So what are the income which is taxable in the hands of unit holders, sir? 1 and 2. So on income 1 and 2, rate has to make TDS. Okay, so the tax has to be deducted. So the correct option is 5. No sir, no sir, no sir. So the correct option is 4 and 5. So our correct option is D, I think. Okay. So dear, our correct option is D. Question number 42. Dear, we have given the detailed explanation, so you can refer that explanation also. Moving forward, a dividend received by RIT from a special purpose vehicle and distributed to its unit holders. A dividend would be exempt in the hands of RIT irrespective of whether the SPV has opted for 115BAA or not. That dividend would be exempt in the hands of the unit holders only if the SPV has not opted for 115BAA. Okay. No sir, no unconditional. Unconditional exemption is there, but only in the hands of RIT. In the hands of the unit holder, there is a conditional exemption. And what is the condition? That the SPV should not have been opted for 115BAA. Okay. Exempt in the hands of RIT only if, no sir. Exempt in the hands of RIT. Exempt in the hands of RIT. Exempt in the hands of unit holders only if SPV does not exercise the option. Okay, so the correct option is C. Moving further, RIT derives rental income of 2 crore from real estate property directly owned by it. Dear friends, this rupees 2 crore is exempt in the hands of RIT but taxable in the hands of unit holders. Short-term cap gain of 1 crore on sale of development property. This short-term cap gain is exempt in the hands of unit holders but taxable in the hands of RIT. Okay, it also receives interest of 3 crore from Gamma Limited Indian Company, means SPV. This is exempt in the hands of RIT but taxable in the hands of unit holders. So, which of the option is correct? All income are taxable. No sir. RIT enjoys pass-through status. RIT enjoys pass-through status in respect of rental income and interest income. In respect of above income. No sir. RIT enjoys pass-through status in respect of interest income. No sir. Also the rental income. RIT enjoys pass-through status in respect of interest income and rental income. Okay, such income are taxable in the hands of the unit holders. Yes. Short-term cap gain is taxable in the hands of RIT. So the correct option is D. So our correct option is D. Moving ahead, real estate investment trust RIT derives a dividend of 8 lakh in Feb 2023 from A Limited, a special purpose vehicle in which RIT holds 80%. Means that dividend income is exempt in the hands of RIT. Okay. The RIT distributes the dividend income in March to the unit holder X and Y, means investor X and Y. What would be the tax consequences in the hands of RIT and unit holders? Dear, that income is unconditionally exempt in the hands of RIT. That income is exempt in the hands of X and Y if A Limited has not opted for 115BAA. TDS will have to be made by RIT on payment of the dividend income to X and Y if X Limited has opted for 115BAA, because only in that case that income would be taxable in the hands of the unit holders. So RIT enjoys pass-through status only if, no sir, RIT enjoys unconditional pass-through status. So the correct option is RIT enjoys unconditional irrespective of. So the point 3 is correct. In case where the dividend is taxable, no sir, dividend is not taxable in the hands of RIT because RIT has the unconditional pass-through status in respect of that dividend income. Okay. Dividend is exempt in the hands of only if A Limited opts. No sir, A Limited does not opt, because A Limited will not opt. It will pay the tax at higher rate. The government will give the benefit to the investors. Okay. Dividend is exempt in the hands of X and Y irrespective. No sir. Dividend is exempt in the hands of X and Y only if A Limited does not opt for. So this option is correct, means 6 is correct. Tax is deductible by RIT on dividend distributed only if A Limited not opted. No sir. If A Limited is not opted, then that income is exempt. Then there is no question of TDS. Tax is deductible by RIT only if A Limited opts for. Yes sir. So the correct option is 9. So the correct option is 3, 6 and 9. So the correct options are 3, 6 and 9. So the correct option is C. Okay. Okay. So dear friends, there is a detailed explanation that we have mentioned over here. So you should refer this also. Moving further, okay, in this case there are three entities. Investment fund, RIT and securitization trust. This is rupees 6 lakh. Okay, so we have already seen what is the case of RIT. As far as investment fund is concerned, dear friends, the income of investment fund from business is taxable in the hands of the investment fund, exempt in the hands of the unit holders. All other income of investment fund is exempt in the hands of investment fund but taxable in the hands of the unit holder. These all these things are mentioned over here. If investment fund has incurred losses under the head PGBP, such losses will be carried forward by the investment fund also only. But if the investment fund has incurred losses under the other heads, that losses can be carried forward by the unit holders, means allocated to the unit holders only in the case where the unit holders hold the unit for a period of at least 12 months. Okay. In case of securitization trust, the income of securitization trust from the business of securitization will be exempt in the hands of securitization trust and taxable in the hands of the unit holders. Okay. So after knowing each and everything, let us start. Mr. B holds 10% in the REIT. So starting with REIT interest, rental income, this is exempt in the hands of REIT but taxable in the hands of Mr. B, means 1 lakh rupees because Mr. B holds 10%. 8 lakh from interest, this is again exempt in the hands of REIT but taxable in the hands of unit holders, means 80,000. Other income, this is taxable in the hands of REIT itself. Okay, now moving to securitization trust, 7.5%. So 6 lakh rupees the income of securitization trust from business. This is exempt in the hands of securitization trust but taxable in the hands of the unit holders, means 45,000. So securitization trust is done. Profit from business investment fund, this is taxable in the hands of the investment fund and exempt in the hands of the unit holders, but rupees 20 lakh, rupees 2 lakh, this is taxable in the hands of the unit holders, and 5% is being held in the investment fund. So 2 lakh into 5%, sir, 10,000 rupees, sir. What you are doing? Okay. Also there is a long-term cap loss of 𝗪𝘶𝗶𝗃. So sir, this loss of rupees 12,50,000, this loss will be allocated to the unit holders if they held the unit for 12 months, at least for 12 months. In this case, Mr. B has held the unit for more than 15 months. It means Mr. B is eligible for the allocation of long-term cap loss. So his share is 5%. So from 12,50,000 into 5% means 62,500. But sir, what Mr. B is going to do with this loss? Dear, in this question you will see that Mr. B has long-term cap gain of 270, so he can set off that loss. So his long-term cap gain will become 2,07,500. So the total income of Mr. B becomes, I think, 442,500. So the correct option is A. Okay, so the correct option is A. So here we have given the detailed calculation also. Moving forward, equalization levy. Dear friends, in case the non-resident who do not have a P in India or have the P in India but the services or the goods that they are selling is not effectively connected to that P, there is a concept of equalization levy being introduced by Finance Act 2016. Equalization levy is levied under two sections, 165 and 165A, not Income Tax Act but Finance Act 2016 as amended from time to time. Okay. So section 165A, equalization levy is levied on specified services. That services are basically the online advertisement kind of services. In this case, the equalization levy rate is 6%. That means when you are making the payment to the non-resident service provider, you should make the deduction of 6% like the TDS and deposit it with the government. Okay. When the 165 equalization levy is not applicable, when the payment is up to rupees 1 lakh, when the services received is not for the business or profession, or when the NR service provider has a P in India and the services are effectively connected with that P. In that case, the income from the online advertisement services in India would be taxable as a normal business income of the assessee and at the rate of 40% as applicable in case of foreign company. Okay. If you talk about 165A equalization levy, that equalization is levied on everything, on goods and as well as services. But that equalization levy, the rate is 2%, and that equalization is not like TDS. That means the payer will make the deduction and pay to the government. No, sir. The service provider or the e-commerce operator will himself has to deposit the equalization levy at the rate of 2% to the government. But sir, 2%, 6%, yeah dear, section 165 equalization levy 6%, 165A equalization levy 2%. So let's say if any item is being covered both under 165 as well as 165A, then we have to give priority to the equalization levy under section 165 because the rate is higher and the government gets the early payment of tax. Okay. 165A is not applicable if the NR and e-commerce operator has a P in India and the services are effectively connected with that P. First case. Second case is that if the revenue or if the gross receipt of the NR e-commerce operator is less than 2 crore, and gross receipt, for the calculation of gross receipt, we will see the revenue from the persons resident in India, the revenue from the person using the IPA located in India, as well as the NR entities in certain cases. Okay. That we have seen that every possible thing. Okay. So ABC and company and PQR company are two NR entities. Both entities own and operate an electronic facility through which they effect online sale of organic products. It means equalization levy, if applicable, would be under section 165A, not under section 165, because 165 equalization levy covers only your specified services, not goods. Okay. The details of their receipt are as follows. ABC and company sale from organic products 138 lakh plus others 285, but dear, the receipt from person using IPA located in India 63 lakh, means the total sale of ABC is 138 plus 63, that is 201 lakh. I agree, dear, that we are moving quite fast, but I can't take much of your time. So ABC and company are satisfying the conditions of 165A equalization levy. So equalization levy under section 165A attracted on ABC and company, provided ABC and company do not have a P in India where the services are where the goods are being where the goods being sold are being means connected to the P. Okay, if you talk about PQR and company, 126 lakh plus 73 lakh, it comes to 199 lakh. So PQR and company do not satisfy the condition of 165A equalization levy. So equalization levy is not attracted in case of PQR. Is equalization levy attracted assuming that both the entities do not have a P in India? But sir, only ABC and company, the equalization levy under section 165A is attracted because the turnover is rupees 2 crore or more. So the correct option is okay. So the correct option is C, I think. So the correct option is C. Okay, moving further, Mr. Rajesh, a resident Indian, is an employee of Majors ABC Limited. Okay, he's an employee of ABC Limited, Bangalore. He, in addition to the salary income, he also earns interest from FD, a foreign company not having P in India, whose gross receipts are equivalent to 1.8 crore. Dear friends, gross receipt is 1.8 crore. It means it is not subject to 165A equalization levy, for which the gross receipt should be 2 crore or more. Okay, rendered online advertisement services. Sir, here the online advertisement services is being rendered, so you should talk about equalization levy under section 165. Under section 165, dear, I agree. But online advertisement services are also subject to equalization levy under section 165A, but only in the case where 165 is not applicable. Okay, but sir, here 165A is not applicable because the turnover is not less than rupees 2 crore. So render online advertisement services for which Mr. Rajesh made a payment of 2 lakh. Sir, 165 for 165 equalization levy applicability, the payment should be more than 1 lakh. Here the payment is rupees 2 lakh. But dear, there was one more condition for 165 applicability. What was the condition? That the services should be for business purpose. Here Mr. Rajesh is not doing a business, but he is a salaried employed. Means although he has made a payment of rupees 2 lakh for advertisement, but that advertisement is not for the business of Mr. Rajesh. So 165 equalization levy not attracted. Or also 165 equalization levy not attracted. Although 165 equalization levy, there is no condition that the services are being used for the business purpose, but there is a condition that the service provider should have the gross receipt of 2 crore or more. But here the gross receipt is only 1.8 crore. Hence, neither the equalization levy under section 165 nor equalization levy under section 165A is attracted. So this transaction is not subject to equalization levy. Sir, one question is coming in our mind. What if Mr. Rajesh is not engaged in any business profession? Then for what he is taking the advertisement services? Very good question. Mr. Rajesh has an antique bike. Mr. Rajesh has an antique bike which he want to sell. For a good deal, he has given the advertisement in Facebook and YouTube, for which he has paid rupees 2 lakh. So Mr. Rajesh is not engaged in business. Thus, advertisement services are not being taken by him for his business purposes, but his personal use. Okay. Moving further, A Limited, a Singapore company whose poem is also in Singapore, means A Limited is a NR entity who owns and operates an electronic platform for services. B Limited is a Malaysian company whose poem is also in Malaysia, means B Limited is also an NR entity which provides online advertisement services. The gross receipt of such services is 3 crore, means to 2 crore or more, means 165 A equalization levy may be attracted in this case because 2 crore or more condition is fulfilled. Okay, A Limited does not have a branch in India, means another condition is also fulfilled. Okay, B Limited has a branch in India at Mumbai and online advertisement services are effectively connected to that branch, means for B Limited, equalization levy concept is not applicable. So sir, if you are making payment to B Limited, we are not required to do anything. Dear, you have to make the deduction of TDS as per the provisions of the Act. Yeah, you are not required to make equalization levy, but you have to make the deduction of TDS if you want to claim it as a business expenditure. But here that is not the domain of this question. Okay. So equalization levy is not attracted on B Limited because B Limited has a P in India and the services are effectively connected with that P. So B Limited is out of picture for, now. If Mr. X, a citizen and resident in India, availed the services from A Limited and B Limited, B Limited we are not concerned, for the purpose of his business in India, means the condition is fulfilled that Mr. X has taken the services for his business. Okay. And the amount payable is 1 lakh and 12 lakh, means A Limited how much amount is paying, rupees 1 lakh, and B Limited rupees 12 lakh. We are not concerned with B Limited. Would equalization levy attracted in this case? Dear friends, equalization levy can be attracted both under section 165 and 165A, but priority would be to 165 because the rate of equalization levy is higher. First, we will see whether the equalization levy under section 165 is attracted. Sir, payment is made by the person resident in India. The services are for the business purpose. Is the payment exceeding 1 lakh? No, sir. The payment is rupees 1 lakh, and for 165A, for 165 applicability, the payment should exceed 1 lakh. The payment should exceed 1 lakh. Please, dear. For 165 applicability, the payment should exceed 1 lakh. If the payment does not exceed 1 lakh, 165 is not applicable. So here 165 is not applicable. If 165 is not applicable, it does not mean that equalization levy is not applicable. Dear, please, if 165 is not applicable, it does not mean that equalization levy is not applicable. Still there is a chance because there is also 165A. Is 165A applicable in this case? Sir, the turnover is 3 crore, means 2 crore or more, condition fulfilled. 165 not applicable, that condition is also fulfilled. Do not have a P in India, that condition is also fulfilled, means every condition is fulfilled. It means equalization levy under section 165A is applicable, but the rate would be 2%, and if it could have become applicable as per section 165, then the rate would have been 6%. But here in this case, as the equalization levy is applicable as per section 165A, the rate would be 2%. Okay. Equalization levy 2% is attracted. So the correct option is B. Okay, so I think the last question is there. Okay, Mr. X, a foreign national and citizen of USA working with M Inc., a US based company, came to India during previous year for rendering services in India. Dear friends, whenever a service is rendered in India, the salary is being deemed to earn in India as per section 912, and the salary income shall be deemed to occur or rise in India and hence taxable in India. But sir, there are various cases where the foreign entities deploy their staff in India for short-term purposes, for evaluating the market opportunities like. But if you are going to tax the salary income in India, it will discourage the investment in India. Okay, considering those things, a section has been introduced. That section is section 1066, which provides for the exemption, for those services if the period of rendering of these services in India for a short term. What I mean by short term, maximum 90 days. So what are the conditions of section 1060? Individual is NR and a non-citizen of India. He is employee of a foreign enterprise which do not have any business or trade in India. Means that foreign enterprise should not have any business or trade in India, and in most cases the foreign enterprise do not have a business or trade in India because the foreign enterprise is evaluating to set up a business or trade in India. Means they are working as a kind of the liaison office in India. Okay. Employee stay in India is up to 90 days, means short term, and such remuneration is not deductible from the income of the employer chargeable to tax in India. Sir, from where the employer will get the income? The employer do not have a business or profession in India. Dear, there can be the passive income like interest, dividend, cap gain, rental, etc. So whatever the income of the employer is in India, he can it cannot claim the deduction of salary paid to the employee from the taxable income in India. Okay, there is no condition, okay, for the applicability of section 1066 exemption. There is no condition that the employee could not have a business or profession in India. Employee can have the business or profession in India, still 1066 exemption would be available to him. So which is not an essential condition. Mr. X should not have engaged in any business or trade in India. That is not an essential condition. Mr. X can be engaged in any business or trade in India. But sir, if Mr. X is if Mr. A is engaged in a business or trade in India, then what is going to happen? His salary income will be exempt under section 1066, but his other income from India would be taxable as per the provisions of Act in India. So dear, that is the complete discussion of your all 50 MCQs which was being given by ICAI. So I hope we have taken sufficient time and make the discussion.